Understanding risk tolerance in investing. Imagine you're strapped into a roller coaster. The climb up feels slow, nerve-wracking. You're anticipating what's coming. Then suddenly, whoosh, you're plummeting down. Your stomach drops, adrenaline kicks in. Now some people throw their hands up and enjoy the ride. Others grip the bar, white-knuckled, regretting their life choices. Which one are you? Because believe it or not, investing is exactly like this. And how you handle those ups and downs? That's your risk tolerance. Wait, did I just compare investing to an amusement park ride? Yes, and I stand by it. Because in the next 10 minutes, you're going to learn how to understand your own risk tolerance so you don't get thrown off the ride before reaching your financial destination. The confrontation. Now let's get serious. Risk tolerance isn't just a fancy investing term. It's the key to not losing sleep over your financial future. It's what separates those who build wealth with confidence from those who panic sell at the worst possible moment. And that brings us to the three factors that determine your risk tolerance. Point number one, your personality and emotions. Are you wired for risk? Some people love taking risks. Entrepreneurs, thrill seekers, poker players. Others prefer security, steady jobs, predictable routines, and zero surprises. Which one are you? Because your emotional wiring plays a huge role in how you handle investments. If the thought of your portfolio dropping by 20% makes you feel like this cat, maybe high-risk investing isn't your jam, and that's okay. But here's the thing, avoiding risk entirely, that's a risk in itself. Point number two, your financial situation. How much can you afford to lose? Let's be real. Risk feels very different when you have $10,000 saved versus when your bank account is one overdraft away from disaster. The amount of money you have, your income, your savings, your safety net, determines how much risk you can actually handle. And here's a hard truth. If losing money would wreck your life, you're taking too much risk. But there's one more factor that might surprise you, because it's something you can control, and it could be the difference between long-term wealth and financial disaster. Ready? Point number three, your time horizon, the secret weapon for managing risk. Time is the great equalizer in investing. If you're 25 and investing for retirement, you can afford to take bigger risks because time allows the market to recover from crashes. But if you need that money next year, different story. Listen, if you're day trading and stressing over every price dip, you don't have an investment strategy, you have a gambling problem. But if you're in it for the long haul, you can ride out volatility and actually use it to your advantage. The resolution. So now that you know what affects your risk tolerance, your personality, your financial situation, and your time horizon, what do you do with this knowledge? You align your investments with who you are. If you can't stomach volatility, go for safer assets like bonds or dividend stocks. If you're young, have time, and can handle risk, growth stocks or even crypto might make sense. The key, don't invest based on hype. Invest based on you. But before you go, I've got one final question. Are you making a decision today that your future self will thank you for? Because coming up next, I'll break down the biggest investing mistakes that could crush your portfolio before you even start. Trust me, you don't want to miss this. Smash that like button, hit subscribe, and turn on notifications so you never miss a game-changing wealth strategy. Your future self is counting on you. Let's build that financial freedom together.